Investors, hello! This is Stock AI Insights channel, bringing you a few minutes of AI-powered insight into the market. Just a quick heads up, this is for educational reference only, definitely not investment advice. All right, today we're digging into some fascinating analysis from Benzinga and Guru Focus, and it's all about a potential earthquake in the AI hardware space. We're talking about a move that could seriously challenge the king of the all right, let's dive right in with something that really caught my eye. It's a pretty shocking bet, actually. We've got a well-known and, let's be honest, very vocal critic of Google who just did something that made pretty much everyone in the AI world do a double take. And that critic is Peter Levels. Now, if you're in the AI space, you've almost certainly heard his name. He's a super successful serial entrepreneur, and for years, he has been probably one of the biggest Google critics out there. I mean, he has not been shy about calling them out for what he saw as just terrible management and a lack of direction. So you can imagine the surprise when he announced he's putting his own money where his mouth is, to the tune of over $1 million. And where did he put it? Straight into Google's parent company, Alphabet. For someone who's been so critical for so long, this isn't just a small change of heart. This is a complete 180. So, of course, this makes you wonder, right? It raises a huge question for anyone paying attention. What on earth does a guy like Peter Levels see that maybe the rest of the market is missing? What has fundamentally changed his mind? Okay, let's break down the case for Google here, because according to Levels, this isn't just some small tweak or a minor adjustment. He's convinced there's a massive fundamental turnaround happening at the company right now. And this is his whole argument, laid out pretty clearly. First, he's pointing to co-founder Sergey Brin coming back, basically acting as the CEO again, which is a huge deal. Then there's their own hardware, these Tensor processing units or TPUs. Think of them as Google's custom-built AI brains. Add to that their insane data advantage from search, YouTube, you name it. And finally, he says they're winning where it counts, in real-world usage, not just on some gamed benchmark test. And here's the really important part. This wasn't some random bet on Google. It was a calculated move. For months, he'd been saying that the AI chip market couldn't stay a one-horse race forever. He was so convinced, in fact, that he'd already trimmed his own holdings in NVIDIA, basically betting that their total dominance had to end sooner or later. And look, it's not just one guy's hot take. We're actually starting to see these same ripples in the market itself. The big money, the institutional investors, they're starting to shift their thinking too. Yeah, just take a look at these numbers. They really tell the story. Alphabet's stock is up a whopping 35% since just mid-October, adding about $1 trillion in value. And investors are now paying almost the same multiple for its future earnings as they are for NVIDIA's. Meanwhile, NVIDIA's valuation, well, it's still incredible, but it's not at those crazy highs anymore. The market is definitely having a rethink, and that massive gap between the two is shrinking. Now, this next bit could be a total game changer. There are reports that Meta, one of the biggest spenders on AI hardware in the entire world, is in talks to use Google's TPUs in their data centers. I mean, can you imagine? If a deal like that goes through, it would be a huge stamp of approval for Google's hardware. It would prove once and for all that there's a real, credible alternative to NVIDIA out there. Okay, so let's zoom out for a second, because this whole Google versus NVIDIA thing, it's really a symptom of something much bigger. It points to what the true endgame for AI really is. And who else but Elon Musk to just cut right through the noise? He weighed in on this very topic and boiled the entire race down to this one simple phrase. And it's a really powerful idea about what it's going to take to win in AI in the long run. So what's he getting at? He's saying that at the end of the day, the company that wins isn't just going to be the one with the cleverest software or the smartest algorithm. No, the real long-term advantage comes from being able to translate that software intelligence into actual physical systems that operate in the real world. And if you want a perfect example of this in action, just look at Tesla. Their whole strategy is a masterclass in this. It starts with autonomous cars, that leads to a fleet of robotaxis, which then evolves into the Optimus humanoid robots. And what's the common thread? It's all built on their own custom AI hardware. They control the whole stack. And that is the exact same playbook Google is running right now with its TPUs. Okay, so what does this all mean? What's the big takeaway for investors trying to navigate this new reality? Well, the bottom line is this. The days of the AI hardware market being a one-horse race, they might be numbered. We're entering a whole new phase. It's going to be way more competitive, way more fragmented, with several giants all battling it out to own the foundational layer of AI.
So the AI analyst verdict is this. Google's hardware reemergence signals the AI chip market is becoming a multi-front battle, not a monopoly. The game is absolutely changing. Which leads us to the final critical question. As this all heats up, who do you think is best positioned to build the hardware of the future? Let me know your thoughts in the comments. See you in the next episode.